we got a pump today and we closed a bullish candle close. That doesn't mean that the bearish tone is over. Let me explain to you why we still can't get the bears off of our backs. Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm just reading the charts. All right, guys, it's about 7:10 p.m. Eastern time. The price of Bitcoin is currently at 103,280, and today we had a pretty good pump. Let's start off here with the weekly chart. Right now, the 50 moving average is at 102,985, so we're above it. This is good. If we were to close like this, we're still technically in bullish territory as long as we don't close below this 50 moving average. The stochastics are still low here, so let's see what ends up happening. We still have about 2 days before this candle closes. Now, the other time frames still don't look too bullish. The 6-day still needs more time on the stochastics to continue rolling up. The 5-day looks like it's rolling over again. The 4-day also looks like it's rolling over. We're just getting no momentum up to the upside. The 3-day chart still needs more time, and the 2-day chart here is still rolling over. We are up above the 200 moving average. That's at 99,389, so that's not too bad. Now, today's candle closed on the daily green. The stochastics look like they're kind of going up. We have bearish divergence here, which is good, but when we really zoom into the stochastics, we kind of see another curve here. It kind of looks like we're rolling over. It looks like we're going to do something like this, where we completely roll over. Now, even though this candle today, we went as low as 99,260, we went up as high as 104,096. We ended up closing at 103,339. Even though this was green, we haven't been able to get above this resistance right here of 104,122. We're already opening up red here. Now, what I'm afraid is going to happen here is we do have this head and shoulder pattern, left shoulder, head, right shoulder. This breaks us down to like 90K, 91K around there. But now what I'm seeing is if we can't get above this 21 moving average, which is at 108,465, this could be the beginning of a bear flag here. And if this is the beginning of a bear flag, this is the next pattern that could bring us down to where that head and shoulder wants to break us down, which is basically to the measured move of 90K. So this is pretty much the pattern that will probably finish off that head and shoulder pattern if it plays out. We need to get out of this pattern, get above this 21 moving average, and definitely back above this 200 moving average at 110,221. If not, things can continue to get bearish here. Now, and the other time frames, the 22-hour time frame, it looks like we're kind of have some room to continue going up, but again, doesn't mean anything to me unless we get above this, at least this 21 moving average. 8-hour, we still have time to go up, but again, 21 moving average, that's at 105,000. The resistance at 104. 4-hour charts are already starting to get a little toppy. We did get above this 21 moving average, but look at this candle, wick, and now another red candle here. This candle closes in the next 3 hours and 45 minutes, and we're not really above the 21 moving average. If the stochastics still do continue to go up, let's see if we could get above this 50 moving average. That's at 106,058. Now, remember, I'm telling you guys, this could possibly be a double bottom here, and that measured move will probably take us to this 100 moving average at 108. This could also be an inverted head and shoulder, left shoulder, head. If we can make it to the 100 moving average here, or to the 200, get rejected, and then we can make the right shoulder, and that could definitely break us out. But again, I cannot be seriously bullish at the moment unless we could get above this 200 moving average with strength, and that's currently at 111,432. We're pretty far away from there. Now, on the 1-hour chart, we got that pump today, but look at the stochastics, toppy. We got above the 100 moving average, and now we started dropping down. It looks like we might have to wait for the 21 moving average to catch up to price, or we probably will roll over to the 21 moving average. That's at 101,954. If we lose that, then we're probably going to get lower. This has the possibility of being some type of inverted head and shoulder, left shoulder, head. We could definitely make a right shoulder here, and this could get us back above the 200 moving average eventually, but this will probably be sometime tomorrow if that does play out. And on the 15-minute chart, the stochastics are low. We did lose the 21 moving average here though, so the next stop could be this 200 moving average that's also at 102,228. So it looks like we pumped for today. I see this more as a relief rally. Look at this as well. This kind of looks like a rounded top. Usually these rounded tops, they roll over. So if we lose this 200 moving average on the 15 15-minute chart, expect more downside. If we could stay above this 200 moving average, then possibly this inverted head and shoulder could play out on the 1 hour, and maybe we could get above this 200 moving average. But like I said, if we do go up, I'm not expecting us to go up higher possibly than 106, 108K. We possibly will be rejected. I can't take nothing seriously until we could get above this 200 moving average on the 4-hour chart. All right, guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe. And if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.